All right. Well, welcome back to another episode of the Entrepreneur to Employer podcast. Today, we have on our podcast the CEO and the founder, Jim Downs of Blueprint CFO, Future Focused Accounting. Jim, welcome to the show.
Hi, Brian, and thank you for inviting me to participate.
Oh, we're excited to have you. So, Jim, you and I have known each other for a long time. In addition to being colleagues, you're also a Scalosity Works client. So we really do know how your business operates. And that's part of the reason why I wanted to have you on the show today, because you have spent a lot of time building your business. You're successfully building it. You're successfully scaling and growing. And you've made that transition from being a solo founder to hiring employee number one and building a robust team, all while being focused on employee experience as well as your client's experience. So want to just have a conversation with you today about that experience, because so many founders will benefit from your expertise, your journey, and just hearing kind of what you've gone through.
Yes, well, I'm excited to share what we're doing. I'm sure I know we can even do better, but I think we're doing pretty good as what we're doing. But employers always need to be focused on how they can make their employees never want to leave.
There you go.
And especially the good ones.
Or if they do leave, they've had such a good experience with us that they leave and they feel good about that time they spent with us, and it's a positive chapter in their life. So
Exactly.
well, why don't we start by let's talk a little about your background. Where did you come from? Where'd you work through, and what made you decide to start your firm?
My background is I was a CPA in Michigan, Detroit, Michigan. I lived in Detroit, and CPAs typically are seeing their clients once a year to come in and do their tax return and also maybe do their audit or review. They're in what they call the attestation business, where they're attesting that the financials are correct.
Check a box.
Yeah, but I had a lot of clients, and I had cities, schools, companies that were making beverages, and construction contractors, and all these different companies. But I never really had any real relationship with them in terms of really understanding what their business was all about, except one client asked me, Jim, you're our financial guy. Can you come every month and meet with us and go through our monthly financial statements and help us figure out what we're doing right and what we're doing, what we could do better? And I started doing that with one client, and then I had another client that I told the story to, and they said, well, we want that too. But CPAs aren't really set up to do that in those days. Maybe today they're doing it differently, but back then I was kind of going against the grain, and the firm really wasn't offering that kind of service at the level that I was at. So I decided to leave and start my own consulting practice. And this was way back in 1985. Okay, so I'm sorry, 2001. So my first client that I signed up for be a fractional CFO. So we're a part-time CFO for companies that are growing and aren't really ready to have a full-time CFO, and a CFO handles all their finance and accounting, and sometimes also HR and IT too. So
right.
But so I signed up my first client, and after a month or two, they were growing really fast. They said, gee, Jim, would you join us full-time and be an employee, and we'll give you some stock in the company? And I said, wow, so I did that. And then I was there for like 10 years. But after all that, I really just wanted to have my own company, basically.
Right.
Just because I felt like I wasn't really doing what I love doing, which is helping companies. I was helping one company, but I wanted to help multiple companies. And so, every day going to the same office, the same place, and not really doing what I wanted to do, I signed up for a program called Strategic Coach, which I paid $10,000 out of my own pocket.
Oh, wow.
It was to teach you how to take your career to the next level.
Okay.
And the first thing I found out in this, like the first day, was that I was in the wrong career.
So it helped you figure something out.
So it goes back to what you're talking about, being an employee. So I was making a lot of money, and I was very comfortable financially, and I didn't want to rock that boat, but I also wasn't doing what I really love to do.
Right.
And so that it's kind of a big trade-off. And so I decided to start my own firm in Michigan in 2001, and
before or after the dot-com crash?
It was right around that same time. But we took off. We had a whole bunch of clients, and but I kind of took my eye off the ball and I decided to do something else for a while. And so it really wasn't until I came to California in 2009 that I decided that I wanted to get back in. Even then, I was still an employee I was an employee at KPMG up through 2015.
Okay.
But and then I left KPMG and I still was an employee of two different outsourced accounting firms. But at the end of the day, and maybe this would be typical for a lot of people, I really felt like I knew how to do it better than they were doing it. So that's when I founded Blueprint CFO in October of 2019.
Okay.
And it's been a great journey. We've, went from just me to now I have 7 CFOs and 13 accountants.
Yeah,
So
the
we're
big team in a
serving,
short amount of time.
and we're helping a lot of different companies with their accounting and making sure the accounting's correct, and that they're paying attention to their numbers, and that they have a budget, and they're not running out of cash, and they have adequate lines of credit. So it's really fun. And the clients that we have, say a lot of good positive things about us, and that kind of transcends over to the employees, because now you're bringing people into a company where we're making a difference for businesses.
Mm-hmm.
And there's you're not just doing something that's needed from a regulatory standpoint, but it's really something that is, in my opinion, reinventing accounting, making it relevant, so that the business owner can't wait to get their financial statements to know how they did.
Right.
And the old day, and before we got involved, they weren't even using them for anything because they didn't understand them.
Right.
So it's really fun from that perspective.
Yeah. And they're able to take the data and actually use it moving forward. So
Exactly. We call it future focused accounting, because most accountants are historians. I'll say this over and over again. Okay, Brian, here's how you did it in March, and now I'm going to go work on April. Okay,
right.
what you look at March and you look at the bottom line. Okay, did I make money? Did I not make money?
It's all rear view mirror stuff.
But in between the revenue and all these in the bottom line, there's all these things going on. So
Yep.
Do you have too many people, or are the people becoming less efficient, or are you spending too much money on marketing? There's all kinds of things, dynamics that are going on in a business that result in the amount of cash you have and then your net income. And so you need to be getting into the details. And that's what we help with our clients.
And it sounds like that's what you enjoy too, getting into the details
Oh,
and
I
being
love
strategic.
it. So I've been doing this for so long, and the company's grown to the point where I get to do whatever I want to do. And I keep telling everybody, well, one thing I want to do for sure is keep working with clients, because I love every time I get a new client, it's a new thing.
You enjoy it. Okay.
It's like a new toy.
Yeah.
And I get to dive into those financials. And I met with a new client this morning and showed him his financials. And I said, these don't make any sense. He's like, well, that's why you're here.
That's why I'm hiring you.
That's why I hired you. Like, okay, well, we got a lot of work to do, because I have no idea what's going on here.
Well, that's an important point you just mentioned, that the business is to a point where you get to do what you want to do in that business. So we're going to come back to that, because that's such an important transition for business owners to make as they go from starting their business, where it's kind of like a job, to actually building a business where they now have a team to do the daily work, and the owner founder is able to work on the parts of the business that they excel in. So we're going to come back to that. But I want to touch base on your KPMG years and your years as an employee. And, I don't know if back then you knew you wanted to ever start your own practice, or if it hadn't hit you yet, but when you made the decision to open your own business, did you reflect back upon those years as an employee and say, these are the things that I enjoyed as being an employee and I want to bring into my business, and here's the things that I didn't enjoy that I want to do better on as an employer?
So originally, going back way back, I really didn't want to start my own business. I wanted to be an employee because I'll say this in general, and maybe somebody will call me up and tell me I'm wrong, but most accountants are not very risk takers.
And that is a true statement. I know enough of them.
In order for an accountant to open a business, it has to be a sure thing. And as we know, there's nothing in business as a sure thing. So you're always, when you open a business, it could fail. Most businesses don't last more than a year or two.
Right.
I mean, a very high percentage, I can't remember what the number is, but it really was more because I really believed in what I was going to do was going to make a difference for people, that I took that leap. Not so much about me, because, again, in both, every time I did it, when I was at KPMG, obviously I was doing very well. And then when I was with the company and I was the CFO, I was doing very well financially. It wasn't really for financial reasons. It was more for doing something that, I knew I could make a good living and have fun doing.
Mm-hmm. Yeah, your days are a little more enjoyable that way.
I think this is another thing that I'll probably get phone calls about, but most I've worked with a lot of companies, probably hundreds, 200, 300. And when you ask a owner of business why they started, usually they came from the sales side of the business, and those are the risk takers, because they know
Mm-hmm.
they can get through it because they can sell.
Right.
But when you don't have a sales orientation, let's say you're an engineer or a lawyer or
Mm-hmm.
an accountant
Or a chef
or an HR
Yep.
expert. I mean, it's
Mhm.
it's a little harder to take that leap and make that decision to leave a job and start a company up from
Mhm.
scratch.
Very true.
Not
Very
that
true.
easy.
No, it is not. So after you made the decision to start your firm, how long did you work as a solopreneur before you crossed that bridge and said, okay, it's time for me to hire employee number one?
So right from the very beginning, I had the idea that we were going to be a CFO and accounting services company.
Okay.
And the reason for that is there's certain things the CFO should do, and there's certain things the accounting team can do. And your real job is to get this data in front of a business owner and have the CFO help them. But there's two different tasks in the company, and two basic tasks. Even today, our revenue is about 50% CFO revenue and 50% accounting services.
Okay.
So right from the very beginning, when I opened the company, I hired somebody I had worked with was willing to work with me on a part-time basis, and so they started as a part-time controller, and they're still with the company today, 3 years later.
That's
And
great.
there's Doug Pori is employee number one, and he's still here, and he's doing a great job for our clients. So after Doug and I started, we got a client, and then we got another client, then we got another client. And pretty soon we're done doing about $1 million of annual revenue. And that was more than I could really handle.
Mm-hmm.
And I used kind of a business coach, and I said, I really want to do this nationally. I want to have a firm that's doing this kind of work nationally with middle market companies. And he said, well, he gave me this idea, which I had never thought of. He said, Jim, you've created a pod, so you
Mm-hmm.
have this book of business that you can manage, and one CFO, and there's two or three accountants. Now you need to go do another pod, get another CFO, and then they can build $1 million book of business, and then get another CFO, and they can build $1 million business. So that's kind of what we're doing. Now we're up to 7 CFOs.
Almost like a franchise model, but
It's kind of like a franchise.
without the
really
franchising legalities.
It's kind of more like a CPA firm. So, that's where I come from, right?
Right.
In the CPA firm, you have the partners, and each partner has a book of business, and they have a resource pool to draw from to do the work. And they're responsible for managing those clients, and they get compensated based on how big their book of business is, and how the firm does in total.
Right.
And that's really kind of what we're doing. In our industry, there are a lot of franchise models, but the problem with that is it's not really a real professional firm. And so like what we have is 7 CFOs. So if I have a problem, there's a new standard for how to account for leases.
Okay.
And I don't know anything about it, so my client's like, hey, we need to do this new thing. So I asked my other 7 CFOs, hey, has anybody done this before? And one person has, versus if you're a franchise and you're all by yourself,
Right. Yeah. So
now
this way
now
you
you're
have a
going to
mastermind.
Google, you're Googling it.
Yeah, you have internal resources and a brain trust to fall back on.
Yeah, exactly.
Makes perfect sense. Okay. So it sounds as you definitely, when you started, you had an employee from day one, and you ramped up from there. As you've continued to add employees and build your team, what are some of the things you've done as the leader to create that employee experience? Because I do know for a fact you have a very low attrition rate. Right? I know your team members stay with you, and that's because of the input or the work you put into employee experience. So what are some of the things you do for your team?
So the CPA firm I used to work with, and when I was there a long time ago, they had roughly 50 CPAs, and now they have 5,000 or something like that. They've grown to be number 14 in the country. And they had philosophy they called the Wheel of Progress. And the Wheel of Progress was you hire excellent people,
Mhm.
and you pay them excellent salary, a little bit more than they can make elsewhere. They're going to do excellent work for their clients, and that'll allow you to charge a little bit more for fees, which allows you to pay those excellent salaries and helps you get excellent people. And so that whole thing is what we do. I mean, it starts with compensation is one aspect of an employee experience with a company. But if they know that you're looking out for them and that you're going to pay them fairly, that's really a big starting point. The second thing is, all of our benefit programs are similar to what you would get at like a KPMG. So that isn't really necessary
That's
at our
impressive.
kind of firm, but we're trying to be that kind of company. We went through a strategy session with a consultant and went through our core values.
Mm-hmm.
We started with our number one core value was our clients come first. And as we went through it more and more, we came back to, our clients don't come first, our people come first.
There you go.
So that's our whole mantra here is, a teamwork and collaboration and looking out for everybody and helping people have a career path. I mean, it's somewhat easier. I don't say it's totally easy, but it's somewhat easier when you're growing. Like we doubled our revenue last year so that everybody can see, wow, if I stick with Blueprint, I can go from accounting manager to controller to CFO, and I can make more money along the way.
Right.
And I get to do, and Jim's setting it up so that I get to do what I love to do, and I'm with a wonderful company that everybody has fun working together. That's one of our other culture core values is that get it done and have fun. And so we have, monthly happy hours and a lot of free lunches if people come to the office. There's just a lot of things we do to make our employees feel special.
Good. Well, and I know I worked with one of your team members, Matt, as we developed your career trajectory, right? We're mapping out, if you're at this level, what skills do you need to get to the next level? So, I know you're thinking and encouraging your team to be able to create those incentives and those plans. So
yeah. I mean, back when I was CFO of the company that I was working full time for, we had something I thought was pretty interesting, which we're trying to do here too, which is getting to understand what the goals of the individuals are and how their career at Blueprint can help them achieve their goals. So, for example, it might be a young person that's 25 or so, and they want to buy a house. Okay, so how can we help them along with their career so that they have enough money to buy a house? And so it's aligning their goals with our corporate goals. That was super successful. That company went from 0 to 50 million during the time that I was there and won the Entrepreneur of the Year award in Michigan in 2001. So, and it was because the same thing. It was what I call people-centric company. It was, they knew people that work there, same thing as here. There was very little turnover because they knew that they were going to make, good compensation and that they're what they thought mattered.
Well, I think you hit it on the head, right? When we as employers line up the goals of the organization with the goals of our team, now there's synergy, right? Now everybody's rowing in the same direction. Now they're incentivized. So it's when those goals are polar opposite that we have problems. So
yeah,
very, very smart of you to
a
do
lot
that.
of a lot of companies, and again, I'll get more phone calls here. A lot of accounting firms are, and I'm going to say this is probably not the right words to say, but are set up to take advantage of younger people. And work them a lot of hours and not pay them very much. And, you kind of pay to play to get your CPA certificate and,
right.
But those early years in the CPA industry are usually pretty horrible. And, and it's playing out now that those kind of firms, it's really hard for them to attract talent.
Yeah.
People don't want to go in work there.
Yeah. They don't want to go to that
We're
grind.
setting it up so that you can work a 40-hour work week. There's no tax season where you have to come in on the weekends and kill yourself.
Right. Work 7 days a week for 16
why would you
hours
want
a
to
day?
work for that other company when you can work for us? Plus you get to learn all these businesses and how they work.
Right.
You're only going to learn, technical accounting standards at a CPA firm. So Not
Good
to knock
point.
CPA firms, but
Not too dissimilar in the legal industry, right? I mean, your first few years as a lawyer, I mean, you're putting in a lot of billable hours, and
yeah,
it's a long road to get to managing partner, and for some, especially coming out of COVID, a lot of people have changed their priorities, right? How they want to work and where they want to work, those priorities have definitely shifted. So you've definitely adapted to the new world of work.
we're trying. I mean, again, like, I always say that we tell this to our clients. The world is all about continuous improvement.
Mm.
If you think you've got it nailed, you're going to set yourself up for trouble.
Yep,
So you always got to be thinking
complacency will
about,
hurt us.
I think there's more that we could do with respect to getting a pulse of how the employees are feeling about the company that, I think we could do better there. Actually, we do a lot of meetings and one-on-ones, but just probably a better way of, we're working towards being one of the Orange County's best places to work.
Right.
And in order to do that, there's a lot of surveys that are needed and that kind of thing.
A lot of data.
Yeah.
So as you made that transition to becoming an employer, what's one of the biggest challenges or hurdles you faced, right? What was your biggest challenge with having employees to deal with?
Um, well, you're an HR expert, Brian, and I'm going to say something, but I always tell my clients that if the less employees you have, the better, because employees tend to be, there's issues. It's not
'Cause
easy having
we're
employees.
human, right? So
Yeah, if you could just do it all yourself, then if you get sick, it's so you have to deal with that. But if you have all these employees and all these things that are going on that are disrupting the business, it's a challenge. So, but you can't, in most companies, you can't achieve your goals without employees.
right.
And so it's just a matter of crossing that bridge and making sure that you do things as best you can, legally, properly, and emotionally properly, in terms of making them feel like they're part of a family now and that you care about them.
Right.
I mean, that sounds really goofy, probably, or corny, but that's what it's all about. I mean, I have a young accounting manager, and she was working on a client a couple of years ago, and the client tried to hire her, and because she's good, she's really
Right.
good. He wanted to hire her full time, and she told him, "Hey, I can't work for you because I work for Jim."
That
And
speaks volumes right there.
it speaks volumes. That made me feel like so good. I work for Jim, and because she was saying it with pride and
Right.
commitment.
Yeah. And
We
that's
just had a staff meeting, and I hired somebody that used to work at a firm that I used to work with back in the old days, and she came on board, and so we had a staff meeting. All the people were in the room, and they said, "Why did you come to work for Blueprint?" And she said, "Well, first of all, I love Jim." And that it's not just me, but it's everybody here. It has to have that same mindset about
right.
Joining a family and being part of something special, that you can be proud to be part of our company and achieve your personal goals.
Oh, when there's true leadership, people will flock to that, right? They're going to want
Yeah.
to work for a true leader. So, and having worked with you, I think one of your challenges, like most California employers, was just navigating the myriad of California labor laws while still balancing growing your company and doing right by your employees.
Yeah. And so you know this, and I'll just say it, is that for the first year or two, or whatever it was, I just didn't really, I just tried to figure it out myself.
Mm-hmm.
And it got to a point where I knew I needed somebody like you to be my partner on the HR side, to make sure that we were dotting our I's and crossing our T's and doing all the things that we're supposed to do. And so,
Which your employees
even
do
down to
appreciate.
reviewing our employment agreements and doing all kinds of things that, it's probably, maybe people don't know what an HR consulting firm does, but it's very, very important to do things correctly. Otherwise, you can get yourself into big trouble.
You can, and all your hard work gets derailed pretty easily. So, but you've done a great job of navigating all of that. So, circling back to something you said early on when we started, is now the business is to a point where you get to do what you want to do in the business, the things you enjoy, the things that give you energy. Would you say that's your best benefit of having built a team, or what's the best benefit you've gotten from building a team?
I think there's two sides of it, and it kind of goes back to our core values. But One is having these young people that you work with, that you can teach them what you know, and how to interact with a client, and help them grow. I mean, the word mentor comes to mind, but also clients, and helping the clients, because I could have stopped when I got to that 1 million, because I was doing well financially. I didn't need to keep growing and take
Right.
on the complexity of adding more people, renting an office, and adding more departments and all. I didn't need to do all that, but it really was. I really felt like there's a huge need in the marketplace for what we do, and that we could be a special company. That would kind of be my legacy, if that I actually did that. I built a company that all around helping businesses do better. I think that's super awesome.
It is.
Because when you run a business, there's really nobody to help you with your business. You have your advisors are your banker, your CPA, your lawyer, and your insurance person, and maybe your HR person. But they're not really, they can do certain little things, but they're not really looking holistically at how the company is performing and coming up with ideas of how to do it better.
Right.
We just signed up a new client, and the client's doing well financially, but they spent like last year they spent like 25,000. They're about $10 million company. They spent $25,000 on marketing. And I'm like, wow, that's really good. You only have to spend that much, but I think you probably should be spending more. And so now we've come up with this whole new idea of how to market the company better. And it's been growing kind of slow, but I can see there's going to be a huge benefit, and that they're real excited about it. They're, what our tagline is, making exciting futures happen.
Oh,
yeah. So it's not about accounting. The accounting only tells the beginning of it is, here's how you're doing today, but what could we do different to even do better? So if you can just grow and not have spend any money on marketing, think about it, Brian. That's pretty amazing.
That's pretty powerful. Yeah. I think every business would love to have
so
that.
If you can
me
spend
included.
some money smartly and increase that growth rate 10% or 20%, wow, it could be huge. And not only that, I can see the excitement in them that I brought that idea to the table.
Yeah.
That's what gets me. That's what makes me come to work every day, is helping people.
Oh, and that's that business advisor piece, the strategic piece, right? It's more than just the accounting and the rear view looking. You're looking forward and saying, all right, that's great. You're at where you're at today. How do we help you grow? So there's a lot of value in those conversations. Well, oh gosh, we're coming up on 30 minutes already. This half hour flies by fast.
Yeah.
So last question, and then we'll wind this down. So for a founder that is getting ready to hire employee number one, what's the best piece of advice you'd like to give them?
Well, this is what I'm not so good at, actually. So I just read a book. This book here about, I don't know if you've ever heard of this book.
I have that book in my library. I love it.
Okay, 4 Obsessions of an Extraordinary Executive, and basically what it says is this company is very successful and had another competitor who wasn't so successful, and they can never figure out why this one was more successful than the other. And the thing that I took away from it was they're very, very careful about who they hire, and make sure that whoever they hire aligns with their core values and their current employee management team.
Right.
I don't do that well. My always idea is, if the person sounds like I think they could be a good fit, I'm willing to bring them on and give them like a 90-day trial is what's in the back of my head. Well, that's really not a good way to go. So where I'm going back to is, when you're getting ready to hire that first employee, do your due diligence and think about what questions to ask them that might show you, because people in an interview situation always look great. And then you find out, once you hire them, they don't want to work hard. They're not willing to go the extra mile.
Rubber hits the road on day one, right?
They don't meet their commitments. They don't show up for work sometimes. I mean, there's all kinds of things that can happen. But it's hard the more that you can ferret that out in your interview questions, which we're horrible at, because when you hire somebody and they come in and they don't work out, it's expensive. I hired a controller. They came in and worked with a couple of clients, and then it really wasn't working out, and she left. And now the client's like, well, what happened? And I gave her all my financial information, and now it's just a big mess. So just because you got to be really careful, even with employee number one, try to hire somebody that you can get referrals on. I mean, I found that a lot of times you say, can I get references for you? And they'll say, they'll give you references, and you call the people and they say, well, legally for my company, all I can say is they worked here for such and such day, such and such day. That's not good enough. You need somebody that was willing to step up to the plate for that person and say, you know what, if you should hire this person, because you're gonna be so happy, they're so great. If they're not willing to say that, then you probably got a dud. So that person should be close enough to people that they used to work with to call them and say, hey, this person's going to call you from this company. Would you mind giving them the true story, not just say that I worked there for some time. If they have that kind of good relationship, like they should have, if they left on good terms.
Right.
You know what I'm saying? So I think following through on references, which is, that last little step before you actually make an offer to somebody is an important thing.
Okay. So that's great advice. So for founders that are getting ready to hire, make sure you do your references and, make sure you align those core values. Those are the two things I took out of your suggestions here, is making sure you do all that to try and increase the odds that first hire is a winner.
Yes.
All right.
100%.
Anything else you want to add, Jim?
No, but thank you for inviting me. This is a fun conversation, and
Glad you enjoyed
a lot of things that are in my head that I don't really, talk about very much. So it's really great.
Awesome. How can people find you, Jim? Obviously, we're going to post your information in our show notes and everything, but how can people find you and your team?
So go online. We're just redoing our website, so you'll see some cool stuff if you go there. www.blueprintcfo.com.
Okay, so we'll find you on the web. And again, your contact information will be in the show notes, as well as your website and any other links that you want. We will definitely have that in the show notes for our listeners. So I thank you for taking some time out of your busy day to be on the Entrepreneur to Employer podcast. I really enjoyed our conversation.
Thank you, Brian. Thank you very much.